Hello and welcome to the lesson. The subject is taxation. Our today's lesson is centered around value of a supply. This is value for VAT. Okay, we are going in this lesson to highlight some of the general principles that apply when determining the value of a supply. And in the context of value-added tax in Kenya, the value of a supply is also known as the taxable value. The taxable value. The value of a supply is known as the taxable value. The taxable value, and it is the amount upon which VAT is calculated. It is the amount upon which VAT is calculated. It is the amount upon which VAT is calculated. So if a publisher is selling a book before VAT inclusive of 1,000 shillings, before application of VAT, then this 1,000 becomes the taxable value, or the amount upon which VAT is calculated. So we apply the 16% VAT. The VAT here will be 160 plus the taxable amount of 1,000. So the total will be 1160. So 1160 is the price inclusive of VAT. That the price before applying the VAT is what you are referring to as the value for VAT, or value of a supply, or taxable value, and it is the amount upon which VAT is calculated. All right, and it's crucial for VAT registered persons to correctly determine this value to ensure accurate charging of output tax and calculation of the overall VAT liability. You understand, candidates? Yes. So in this lesson, we want to see how this amount is arrived at. And the VAT Act and the VAT regulations in Kenya provide the framework for determining the value of a supply. So we want to identify a few general principles surrounding the value of VAT, value for VAT. The taxable value of a supply of goods or services is generally considered the consideration price paid or payable for the supply, excluding the VAT itself. And that means it's the net amount before VAT is added. So inclusions in the value of the supply would include like levies, duties, and so on. So we want to look at some of the inclusions in the value of a supply. What are the inclusions? Inclusions in the value. What does it contain? Value of a supply. What does this value contain? Now, number one, the consideration for a supply is broadly defined and includes the value of the supply. It includes the total amount charged for the supply. One, the total amount charged for the supply. It includes, number one, the total amount charged for the supply, and this supply could be a good or a service. This is the basic price of the goods or services. Then it may include any other charges, levies, any other fees. It could be excise duty, import duty, and specific levies that may be included in the taxable value before VAT is calculated. Import duty, export duty, etc. So you have, first of all, the total amount charged for the supply. Then there could be other charges or levies that are included in that price. It could be the import duty, export duty, and other charges. These are calculated in the taxable value before VAT is calculated. There could also be incidental costs. Incidental costs are also included in this value. Any costs incurred by the supplier in providing the goods or services that are charged to the customer, for example, packaging, transport, insurance, are generally part of the value of the supply. 4, we have payments in kind. Payments in kind or non-monetary consideration. Payment in kind or non-monetary consideration. This may also be included in the value for VAT or value of a supply. If the consideration is not purely monetary, the open market value of the non-monetary consideration is also included in the taxable amount. You understand? We may also have 5 subsidies. Subsidies directly linked to the price of the supply. Subsidies directly linked to the price of the supply. How are subsidies treated? Now, if a subsidy is given to the supplier and the subsidy directly reduces the price charged to the customer, it may be included in the taxable value. It does not reduce, but it's included. So subsidies are included in the taxable value, in the value of a supply. You understand? And candidates, there are also some special considerations when it comes to determining the taxable value or the value of a supply. We have special considerations, some of which I've mentioned. Special considerations in relation to the value of a supply. We have the open market value. This is where the supplier and the recipient of a supply are related parties. Okay, open market value. For related parties, open market value. There is the open market value. And here we are talking about where the supplier and the recipient of the supply are related parties. For example, companies within the same group or individuals with close family ties. The commissioner may determine the value of the supply to be its open market value. And the open market value is defined as the consideration that a supplier would reasonably be expected to fetch in an arm's length transaction. That is to mean a transaction between independent parties made at the time of the supply. And this is to prevent artificial manipulation of prices to reduce VAT liability. Another special consideration is self-supplies. Now, if a VAT registered person applies taxable goods or services for use outside their business, this is generally treated as a taxable supply. So the taxable value in such cases is consideration paid or payable for the acquisition of the stock, or even the open market value of the goods or services at the time of the supply, whichever is higher. And that ensures that input tax claim on such goods or services is effectively accounted for. Self-supplies. What of imported goods? This is another special consideration. Imported goods. Now, for imported goods, the taxable value for VAT purposes is the sum of the customs value of the goods as determined for customs duty importation. It may also be the freight and insurance costs which are incurred to bring the goods into Kenya, and any incidental or auxiliary services associated with the importation. So if you have to calculate the value of a supply of imported goods, then you have to include the customs duties, the excise duties, and other levies paid on the importation, including freight and insurance costs. Then we have import services. Imported services. We have imported goods and imported services, what we call the reverse charge. For imported taxable services, where the recipient in Kenya is a VAT registered person, they are generally required to account for VAT under the reverse charge mechanism. And this taxable value is the consideration paid or payable for the imported services. Special consideration number 5, we are discussing value of a supply is supplies by auctioneers or agents. Supplies by auctioneers or agents. Supplies by auctioneers or agents. The value of a supply made by an auctioneer or agent on behalf of another person is generally the amount for which the goods or services are sold. You understand? Yes. So these are special considerations in regard to value of a supply. Now, before we close the lesson, let us address the issue of exemptions or exclusions from value of a supply. That is to mean, what are the items that generally are not included in the taxable income? Exclusions from value of a supply. Exclusions from value of a supply. What costs or what is excluded from the value of a supply? Here we've identified what is included in the value of a supply. So we want to highlight what is the items generally not included in the taxable value. Because while most charges related to a supply are included, there are some specific items that are explicitly excluded from the consideration for VAT purposes. One such item is output VAT itself. Output VAT itself. Output VAT itself. VAT is calculated on the value of a supply. So VAT calculated on the value of a supply is not part of the value of a supply, because the value is the net price. 2, financial charges for goods sold on credit. For goods sold on credit. Financial charges for goods sold on credit. Now, this typically refers to interest or financing fees charged for deferred payments separate from the core price of the goods. That is also excluded from the value of a supply. Interest for late payment, number 3. Interest for late payment. Interest for late payment. Interest for late payment. These are penalties or interest charged for overdue payments by the customer. These are generally not subject to VAT. So the interest that is paid, for example, if one defaults on undischarged interest, that interest is not subject to VAT. It's an exclusion. Interest for late payment. Interest for late payment. Then you have tourism levy, number 4. Tourism levy. Tourism levy. Tourism levy. Now, the tourism levy, where applicable, is a separate charge and typically not included in the taxable value. You understand? It is a separate levy and it's not included. It is not included. It is not included in the value of a supply. It is not included, in other words, in the VATable value. The taxable value for VAT purposes is the VATable value. This is also known as the VATable value. Taxable value, value of a supply, VATable value is the same thing, and tourism levy is not part of it. Then you have service charge in lieu of tips. Service charge in lieu of tips. Service charge in lieu of tips in hotels and restaurants. Now, under specific conditions, for example, where there is an agreement in place and the service charge is less than 10% of the bill, this amount may be excluded from the taxable value. We can also cite Number 6, discounts. Discounts are exclusions from the value of a supply. Discounts. This is bona fide trade discounts offered at the time of a supply. They generally reduce the taxable value. So these are 6 exclusions from the VATable value. And that will mark the end of this lesson on value of a supply, or value for VAT, which we've defined as the taxable value or the VATable value. We've said it is the amount upon which VAT is calculated. We've outlined the general principles that guide in the determination of the VATable value. The first principle is that the total amount charged for the supply is the starting point, the total amount charged for the supply. Then we add any other charges or levies like import duties, like export duties and other levies. There could also be incidental costs associated with the supply, like insurance, transportation, and so on. Then number 4, we have payment in kind. This is payment in kind, or non-monetary consideration is also part of the VATable value. Then subsidies directly linked to the price of a supply must also be included in the VATable value. We've also explained candidates some special considerations in relation to open market value, the self-supplies, imported goods. We also have imported services and supplies by auctioneers or agents. Then lastly, we've highlighted the exclusions from value of a supply. One is the output VAT itself. Number 2, we have financial charges for goods sold on credit. Number 3, interest for late payment is excluded. The tourism levy is excluded. The service charge in lieu of tips in hotels and restaurants, this is excluded, and discounts. So candidates, is very important to determine the correct value of a supply. Now, if you are to be asked, what is the importance of determining the correct value of a supply, what would you answer? Let's answer that question before we close. Importance. What is the importance? Why is it important to determine the accurate value of a VATable value? Why is it important? The first one is so as to calculate accurately the output tax. It is for accurate output tax calculation. Accurate output tax calculation. Accurate output tax calculation. The VATable value has to be accurate so that we can arrive at an accurate output tax calculation. It ensures the correct amount of VAT is charged to customers. It also gives rise to correct VAT liability. If the VATable value or the value of a supply is accurate, then the VAT liability will also be correct. It impacts the total VAT due to KRA. The third obvious reason is for the purposes of compliance. For compliance purposes. Accurately determining the VATable value avoids penalties and interest for claims by the recipient if the invoice does not, it avoids penalties and interest for under declaration or even miscalculation of VAT. Compliance. Then another reason why this calculation is important is just for input tax claims. Input tax claims. Because sometimes it's important, it is necessary to apply for claims, input tax claims. So the taxable value affects the validity of input tax claims by the recipient if the invoice does not reflect the correct taxable value. So that is all, candidates, for today's lesson, which is the value of a supply or value for VAT. And we've said at the beginning that in the context of value added tax in Kenya, The value of a supply is also known as the taxable value or the VATable value, and it is the amount upon which VAT is calculated. Thank you. God bless you. Bye-bye.